This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look at the gold market. The gold market, especially on the daily time frame, the situation is a bit tricky. Well, and although we have talked about this potential, this move down and this reversal on Friday, and that looks really in the intraday charts on the daily time frame, this looks a bit scaring, but already some traders have put the question whether this that was really anemic price action to the upside, because market has shown really shallow trading volumes on futures with this move up. This reversal is fast, and they can't exclude the possibility of reestablishment of the bear trend on the gold market, since Fed Reserve has put the back pedal with the erasing, with the closing of the quantitative easing program and so on. But we have discussed this a bit on the weekly research on the fundamental part. But from the technical point of view, I can say that it's a bit too early to panic, and market hasn't passed the bullish edge yet. So yes, this is the deep retracement that has happened on the weekly time frame, but that is not the strategy, because what in fact we have after this move up, market has shown just 50% retracement. That is, as you all could see on the weekly time frame, is the 3.8 major fib resistance level. Market has bounced down from it. The fact that market has shown the very small trading volumes on this upward action, that is normal, because on the weekly time frame, as you can see, this was really significant move down. That is the first move up. If you take a look at the trading volumes of the annual reversal pattern, the reverse head and shoulders double bottom, you'll see that at the first reversal swing, the volume as a rule stands opposite to the direction. It doesn't support that. And instead, and conversely, the downward continuation, the first downward continuation after reversal swing, shows increasing volume. That is normal, because initially market treats this action as a retracement, and on the trend, retracement usually comes with the reducing of the volume. The problem will begin if at the final part of the reversal pattern the volume will not support the reversal. In other words, we need to see the supporting action closer to the end of the reversal pattern. So for instance, on the final part of the reversal head and shoulders, on the final part of the double bottom, the trading volume should support the market. If this will not happen, that could be the problem. But currently, since this is the first reversal swing on the weekly time frame, I don't see any problems with the fact that volumes here stands low to the upside. Second moment is concerning this level. That's just the 50% retracement. That's normal after the significant move down. So as I said, market just hasn't passed through the bullish border yet, where we could say that probably bullish scenario will be vanished and we can't count on it anymore. That's not the point just yet. Well, what we see on Friday market has hit daily overbought right at the 618 resistance. Here was also the monthly pivot point. 618 resistance from that most recent swing up, and that triggered the retracement down from the technical point of view. From the fundamental point of view, that was the comments from the president of the St. Louis Federal Reserve Bank, who said that he can't exclude the possibility that Federal Reserve will return to the discussion of the potential contraction of the quantitative easing program in October. That has led to this bounce to the downside. Well, whatever bounce was triggered by, it doesn't change the overall picture. Here we have two contradictory patterns could be formed, and in fact, if we wouldn't get this bearish stop grabber pattern that we have now, the situation becomes more clear. But as we have reversal head and shoulders in progress, and we have discussed this chart on Thursday, market, in fact, by this tab grabber could take out of these lows and could reach the 1275 area, the 618 support of the whole move to the upside. And from the perspective of the head and shoulders pattern, that will not be the problem, because 618 retracement at the right shoulder of the head and shoulders is normal. The problem is with this butterfly. So if market will take out of these lows, this butterfly will be vanished. But this butterfly could become the cornerstone of this upward action. Why? Because the 50 and 50 area is our potential target of the retracement and the potential destination of the retracement BC leg on the monthly time frame. And if we simultaneously would get the pattern that will lead us right to this level and will simultaneously become the reversal pattern, that will be just the double deuce, because we've got the reversal pattern right at the top of the retracement BC leg from the great ABCD pattern. Well, that's why it could become great if we could get this butterfly. But this, as you can see, this bearish tab grabber has complicated overall situation for us, because if market will move higher, move lower, it will take it out of these lows, and in general this will change the daily picture. But I don't know, maybe later market will form some greater butterfly with this possible swing down as the single swing down. Maybe market will start to form something of that sort later. I don't know. Second moment is in general the stab grabber pattern also could fail if market will turn up and take it out of these highs. Although it looks solid, it's really solid candle to the downside, and I'm in fact do not have any illusions concerning this. I think that's not big probability that it will happen, but still it could happen. And in this case, let's shift to the forward time frame chart. In fact, here I do not have a lot of to discuss with you. I just have pointed here the pivot point and weekly pivot resistance one, and also you can see this fib resistance right at the daily overbought, where market has shifted to the downside from the technical point of view. But guys, spend some time and just take the brief look at this level. It's 76.8 support level from this move up. Why it could be significant? Because this is very typical level for the butterflies, and very often the starting point of the right wing of the butterfly starts at this 76.8 level, and that will not be the really hard work just to take the brief look at this level when the market will start to move around it. So I just want to track this butterfly right to the end. Well, maybe market will continue move low and taking out of these lows, but if market will fail to do that and we'll see some reversal right from that area, well, who knows, maybe we will still get it. That's why it's probably worth our attention. But in general, I think that we can't make any solutions and decisions until market will not finish with this bearish stab grabber pattern. When it will happen, we will take a look at the final picture and decide what we will do next.